So who is before we go live? Can you see the voices? Who is who?
Well, we are live right now. You guys heard a little bit of that background noise. So we are live right now, and welcome on a Friday night. This is the Dog Pound Unleashed, episode 9. Yes, sir. So, today the price, this is Blockchain Dame, by the way. As always, I am your host for tonight. The price of Bitcoin right now is 63.80, Ethereum's 210, and then we got LTC around 51 bucks. And we also have the regulars in the building, the regular dogs. Where you at? We got my man Blues, we got my man Clay, we got my man Wolf, and as always, we bring y'all the hottest special guests in the crypto sphere. And this guy, y'all had a lot of questions for him, a lot of hype around him. We got the main man Alex Kruger in the building. What it is, my brother. You still there rocking with us, Alex? You there?
Yeah. How you doing?
There we go.
How is everyone?
It's good. I was trying to give you that grand entrance, man, but I like how you just popped up in there. So I mean, you seem to have a lot, and I see it as you're like one of these up and coming like crypto Twitter stars, if you want to call it. I don't know, but you seem to have a lot of people that were interested in seeing this episode with you. Can you just explain like why does the crowd like you so much, and can you just go into a little bit of your background and what is a crypto macro? What is that? So just, if you don't mind, just give us the rundown on that.
Just first, crypto macro is just I like what I do is I trade macro and I trade crypto, and I like talking about it. So it's just simply that. There's no brand there. It's just crypto macro. It used to be trading macro, and then I started basically tweeting a lot about crypto and getting very much involved in the space. So I thought it would be more representative to whoever follows me, to like what they're getting into. Back to myself. Let me share a bit about me. I'm from Argentina. I live in New York at the moment. Okay. I left Argentina over 15 years ago, so I've been around. And as I said, I trade crypto. I trade global macro, that is stocks, rates, FX, and commodities. And I've been trading independently, managed accounts for 5 years now. So that sums it up in short. I trade crypto, I tweet a lot, and I'm happy to be here.
All right, so I heard that you do the global macro. So apparently and obviously you were probably doing that way before you got into the crypto game, right? How long were you trading before you got into the crypto space?
My whole lifetime, and
since he came out the womb, he was trading.
I've been trading about 20 years.
Nice. Oh wow!
And that's full time, last 5 to 7 years.
Okay, cool. And what was it like taking that big leap full time? Like, what were you doing before that? Just for everybody who's thinking about that.
I was doing sales and trading for a bank, and 5 years ago I went independently, and it was quite a leap.
All right.
I mean, it was quite a leap. It was not easy at the beginning, and I mean, I'm happy to talk and talk anyone looking into basically going independently. I had clients, and I had something I wanted to do.
Yeah.
So into crypto itself, I started trading crypto very actively early last year. I got into it basically between it's in May when it really piqued my interest. I've been known among my friends as the Bitcoin guy for many years.
Okay.
I got into Bitcoin in 2011, talking about basically the European, basically the Eurozone collapsing. So I think Europe is going to collapse. And that's what got me into Bitcoin.
Yeah.
But I didn't start trading, like making it a profession, until last year. So I'm up and coming. I'm not an OG. I'm not.
Yeah, that's fine.
OG, triple OG, triple OG. Well, look, it seems based on how your followers blew up our account, we would have thought you were a fucking OG, man. We wouldn't even knew it. So speaking of those questions, I think it's now a good time to probably get into some of those questions. Like I said, whenever we posted that we were going to have you on the show, that you got so many responses and replies from people in the crypto space. Even the dog commented and he was excited. So I'm guessing everybody is waiting to hear some of your answers to these questions, and we got them straight submitted from the people off of Twitter, and we're trying something new right now. I have these questions here, so I took all of these questions off the internet and I screenshotted them, and I spent, this is all of 10 minutes of my creativity right here.
It was the whole day yesterday. Don't lie, Dave.
I spent the whole damn day doing this, man. Y'all better clap it up for that one. So anyway, yeah, as you can see, it's getting the job done. But if there's anybody out there looking at this show, you see we need some visual graphics help. So feel free to hit one of us up so we can make this look all pretty. But anyway, we're gonna get the job done today. So are you ready for some questions, Alex? I think we should.
I am, but before getting into questions, I wanted to say that I think the most important thing for many people in crypto, that those who have not been involved for too long, and are basically some people are feeling quite tense about this bear market and suffering, and I'm very sorry about that. And I just wanted to say that even if I am bearish in many ways, I don't think I think the shit already happened. And I think we can, I mean, everybody can relax, can trade. It's not going to be the end of the world, even if it crashes down to 3K, which I believe it's possible, very unlikely, but possible. I don't think it's a matter of concern. I mean, it sounds extreme to say that a 50% drop would not be a matter of concern, but for long-term traders, or for long-term investors, I think the worst is way over and it's time to chill.
Okay. Okay. So
very good.
I know, right? I like how he started this whole prequel off to these questions. But you know what? I'm glad that you spoke your mind right before that. But I just want to let you know that this is the Dog Pound Unleashed, right? So unleash your thoughts, unleash whatever you have to say, and don't hold it back, because this is your time and this is your episode, man. So feel free to get whatever thoughts you feel are applicable to these questions. So first question, he wants to know. We got Crypto Mirror from Twitter says there's been a lot of talk regarding stable coins, institutional interests, ETFs, BACT, if that's how you want to call it, acronym, BAAKT, you name it. Aside from regulation, what do you think would be the fundamental catalyst bringing light to the end of the tunnel?
That is the Van Eck ETF.
Van Eck. Okay.
Basically, we need more money coming into the business, into Bitcoin. There is a great deal of natural sellers. Basically, miners are mining about 24-25 $1 million a day of new coins every day, and that it may not be sold immediately, but eventually it gets sold. Some speculate that they need to sell. So Bitcoin needs fresh money to basically keep it afloat. It's a matter of demand and supply.
Okay.
And that difference is the ETFs. That's what we are all waiting for. That's why it's so important. That's why fake news about it can move price 40% in 2 weeks. And for many people in crypto, the ETF is seen as something bad, meaning somehow some people see the ETF as something that is not needed, or that it basically implies some sort of moving Bitcoin away from the roots of what it represents. That's just philosophy. What matters for prices, we need more money coming in. Institutions are that money. Retail demand is quite dead at the moment for obvious reasons.
Yeah.
So that's the answer. I mean, happy to talk back stable coins, the specific numbers, the statistics, but the answer to the question is the ETF.
Yeah. So okay, go ahead with your question.
Just in respects to that, I know a lot of people say that we haven't got institutional investors in yet. Do you believe otherwise? Do you think there are institutional investors already in crypto, but they just don't like?
There has been $5.9 billion of institutional money flowing into crypto this year alone. That's a lot of money. Basically, that represents 237 days of miner supply, assuming miners sell everything, which is not the case. So it's a lot of money. And that is only looking into hedge funds and VCs that are crypto-oriented. So it doesn't take into account all the players that are multi-asset and they're doing other things. So yeah, they're coming in.
Yeah.
In fact, this is new information I got recently, and I was very, very positively surprised. I was surprised.
It's a lot of money.
That is a lot of money. But I have another question. So you mentioned price movement regarding the potential passing of the ETFs and blah blah blah, 40% going up or down, whatever. So do you think that how much of an effect once these ETFs officially pass? How much of an effect do you still think it can have on price? Do you think that effect has been diminished a little bit due to the delays, or what?
No, the delays don't matter at all. I mean, I don't make predictions, so I can't really answer that. No, but it's not. Of course, there's a lot of people like to go out there to the media and make predictions, and I think price will do whatever price wants to do, and there is no way to predict it. We can estimate probabilistically the direction of price. It is absolutely impossible to pin where Bitcoin will go. Because it depends on how much money is going to come into the market, and there's no way to know that. So we cannot know. If I need to put a price, which I don't like to do, I see if an ETF will be approved, I can see Bitcoin quickly trading up to 13K, which is basically like the last line of resistance before it becomes a free run to the all-time highs. I don't see that happening for now. I mean, like to be clear, I don't think the ETF will be approved for a long time, unfortunately. So I opened up saying that I was not concerned about downside, but at the same time, I'm not very excited about the top side at all.
I feel that.
I mean, it's a trader's market.
Yeah. Fair enough. So with that, just a quick question around the institutional money that's been flowing in. Obviously, I think it's fair to say that institutional money is much smarter than retail investors. So do you think it's going to be much more difficult with the institutional money in for Bitcoin or the crypto market in general to get back to those all-time highs? Because I mean, these guys, I would imagine, would have set targets in mind, and they'll be taking their money out for, locking in those profits, whereas retail investors tend to hold on until it crashes.
No, I don't think so. I think that kind of institutional money is already in the market. Are the jumps of the world. There's a lot of algorithmic shops that basically came into the market in the last 12 months. Asian ones, New York-based, Chicago-based, and they are trading and they are in the market. What we're looking for is institutional demand, ETF-driven, more long-term. We're looking for basically portfolio managers and what in institutional parlance is called real money. We're looking for real money. We're looking for funds, pensions, and the like. Not hedge funds. They already came. So no, the answer is not at all. It would be extremely bullish.
Interesting. Cool.
Okay. So we have a couple of more questions in here. So, okay, I have one from YGIHEA. So Gia E, I guess. So this person said, "Hi, Dapan. Can you ask Alex Kruger thoughts on Ethereum long term his long-term hold crypto portfolio if he constructed one. So what do you think of Ethereum long-term and any long-term holds in your crypto portfolio?
I don't have, first of all, I don't have long-term holds. I don't. I put positions up to a year out. I don't keep long-term positions, and that's rare. And for that, first I need a bull. Basically, shorts. I lost you. Hello. Oh, there.
Yeah, no, we here.
Any short positions are strictly short-term, very much short-term. And for long-term positions, I need a bull market, which we don't have one. So no, everything I do right now on the crypto space, and the crypto space only, is strictly short-term. So unfortunately, sorry to disappoint, I don't have a long-term portfolio. I mean, I have a few alts that I have, but they're small positions, and I'm not crazy about any of them. Right now, I have long positions of Bitcoin, BCH, and positions right now, and it's short term. It is strictly short term. What was the other question? It was
no, it was say your long term thoughts on So it was that question. It was your long term thoughts on Ethereum.
Unfortunately, I think the market changed radically with basically ICOs becoming seen as a scam among too many people. So we have two factors. On one hand, we have regulators not happy with the whole utility token issuance, and basically investors took hold of the message, and the ICO market is quite dead. We still have a big market, but it's mostly on the security tokens that is upcoming, and we have a big market on the SAFs. Most of the fundraising this year were jumbo deals that were not raised via utility tokens, and basically where I'm getting to with this is that the main demand factor for Ethereum, it was ICOs, it was not dApps, it was not smart contracts, it was ICOs, and the ICO market is quite dead. And there is no reason to see it raging again the way it used to, the way it did. So there are other coins that, like, for example, Raven coin, a specialized coin that does what it's supposed to do much better and focuses on security tokens. I think Ethereum is going to have a hard time in the space. One thing is trading it short term, a different thing is having it on the portfolio. I would still, if I had a long-term portfolio, I would have a small position of Ethereum just as a hedge, because the community is huge and very committed. But I'm not particularly bullish.
Yeah, so I have a bonus question.
I could just quick one. I could keep on rambling on basically the economics of Ethereum, marginal cost, and how basically but like it's a complex talk. So let's maybe better to move on.
Yeah. So I got a bonus question, and you could just answer it in one word: Ethereum or EOS, like in the future. Which one you think stays? Ethereum versus EOS. If you had to pick one, which one do you think?
What time frame?
The next 3 to 5 years.
No.
Ethereum.
Okay.
Yeah.
Okay.
Yeah.
That was a bonus question. Yes.
I have a question about backed products. I mean, do you think CFTC approval of their products matters in launching them? So do you mean CFTC decision matters, and if they will approve it or not?
The CFTC approval in regards to what?
Backed Bitcoin futures.
Well, the CFTC
I don't know if you're aware of.
Yeah, the CFTC, there's nothing to approve there on backed futures.
Okay.
So yeah, there's nothing at this point for the CFTC to approve. It's basically a self-certified process, the same it was with the futures last year with the CBOEs and the CMEs. It's very straightforward, very fast. Yeah. They could come back later on and say, we do not agree, and basically, like, for example, what happened with the Swedish tracker, damn, I forgot the ticker, CXPO.
Yeah.
You know, it stopped trading, actually. Okay. CX, like, it basically is passed through, and then later on they can, well, that was basically SEC, but it's possible for something to be, the CFTC could come back later and take it off the market. It'd be extremely rare as far as I know, I may be wrong. And to answer specifically, I don't think it's a matter of concern whatsoever.
Okay, fair enough. Thanks.
Okay. So we'll go on to the next question, and that is, are there, okay, so this is an interesting question from Quant Fiction. Are there underlying global themes or fundamental factors that influence Bitcoin's price, or is it purely sentiment driven?
Well, I'd say that that question has, it requires a three-part answer. First of all, it is not strictly sentiment driven in the sense that what matters the most is not TA charts and it's not crypto Twitter. What matters the most is what the big guys are doing, what the big miners are doing. And they are not looking at RSI 14 for like the last month. Like some do, I mean, but it's not the norm.
Yeah.
So, I mean, what matters the most is flows. We never know where the flows are going to be coming from. Sometimes we can see them, as it happened 2 months ago with the Bitfinex margin shorts spiking up to all-time highs in what was quite an amazing move that was followed 3 days later by, what was it, like crash from 7,200 to 58 or no, like 61. Yeah. That was quite a day. But basically, it's for me, it's about flows. So yeah, the answer in the first part is much more important than sentiment and charts is flows. So narratives matter a lot. Secondly, on the second part would be that at the moment there is no real connection whatsoever between global markets and crypto. They're disconnected. There is no correlation. There is not enough money trading in both markets to basically establish a connection. So they are independent. That being said, it's a matter of time. Once it becomes quite institutionalized, and more basically portfolio managers come into the space with positions across asset classes, a correlation should emerge. And once that happens, I think the most important factor is liquidity. Yeah. So global liquidity is being reduced drastically by central banks nowadays, specifically mostly by the Fed. And that would basically markets expect that to continue into the following years. And once a correlation emerges, that would be quite bearish for crypto. I mean, yeah. So correlations, liquidity, and the flows, ABC.
Yeah, that's interesting. You guys have anything to add in on that? What do you think?
It's interesting, actually.
Yeah, I'm just taking it all in. I'm more of a spectator this episode. Just listening.
I know this episode. This episode. I'm not gonna lie. This episode is a little different because he really over here dropping that knowledge on us, man. We just over here just chilling, listening. I see Trader Man sneaked in. What's happening, man?
Yeah, I mean, I agree. There's a lot of speculation around that. The fact that crypto can be a refuge if stock markets crashes, but this is a false assumption in my opinion, because who will so go on.
And I gotta say something there that is quite interesting. Sorry to interrupt, but this is extremely interesting. Fundstrat put out a survey like about a month and a half ago where they surveyed retail on one hand, and on the other side, they served their basically institutional clientele and their network. And it was quite interesting to see that, contrary to what I think is logical, institutional money also believed on average that the most likely scenario in the case of a recession was Bitcoin prices or crypto prices to go up, which I found striking. So I thought to say that.
In regards to that, I haven't really lived through a market or traded through a crash. Does everyone just pull their money out and just sit and wait, or are people still trying to trade during those periods?
Who is people here?
Oh, like big investors, institutions. They just pull their money out and just kind of sit on the sides.
Well, yeah, because sitting on the sides pays cash. Like, for example, cash nowadays pays you 2%, 2.25 basis points. So you just having your money in the money market pays you. So the same is happening in stocks right now. I mean, it's not a coincidence that suddenly we're crashing and there is actual true fear for the first time in a decade, is because cash pays you over 2%. So big funds are selling, they're closing positions, they're moving more to cash and bonds and other less risk on assets.
Yeah.
So that applies. That eventually that should apply to crypto, and we want it to apply to crypto, because once that happens, means that big money is in, and if big money is in, prices are going to be up in the heavens. Because, I mean, think about a 200 billion market cap is peanuts. It's just peanuts.
Yeah, compared to the other markets, it's not it's not really that much. So,
yeah, I guess that brings us to the last question that we have. So the last question that we had is Ray the Rock from Twitter wants to know your long-term, speaking 10 plus years on Bitcoin and why. And he put a little chart up here that had some stuff on there, but I guess he basically just wants to know where you think Bitcoin will be 10 years from now. Not in price or anything, but I guess the use. Yeah. So
yeah, to look into that, I think we need to look into the bullish, the true fundamentally bullish catalysts, and they are three basically, or like 2.5. Let's say two. One is Bitcoin as a store of value, right? So Bitcoin's penetration across institutional investors and institutional investors diversifying into Bitcoin, which would happen via an ETF. So basically Bitcoin becoming digital gold in the eyes of big institutions with big portfolios. So that's one bullish catalyst that we want it to see happen. And I think that's important. Now, on the other hand, I'm not being very clear here, but to basically to summarize, on one hand, we have a Bitcoin as store of value, and on the other hand, we have Bitcoin as offshore banking store of value or currency. I think those are the two main things. So offshore banking, I mean, like it or not, Bitcoin it's an anti-system investment vehicle or currency or asset. And it even though it can be tracked and there's ways for forensics to find the trace of Bitcoin, it's still not the same as having your money in a bank account in Panama that had to basically had all their account holders disclosed, and on top of that, you have basically a phenomenon that started happening a few years ago worldwide, which is the long reach of U.S. regulators via something called FATCA, that basically forces all bank accounts, all banks in the world, when you open a bank account, you need to disclose if you're a U.S. resident. And so what's happening is banks around the world don't want to take U.S. residents anymore. And I think a part of that, first of all, I think that is not going to change. It's just going to get more and more clear, regulated, and for tax evaders, it's going to get impossible eventually if playing within the system. So they will look outside, and what's outside is cryptocurrencies. Now, this being said, this may not sound that bullish because it means that regulators are going to be, if that happens, regulators are going to be looking into crypto with a very negative, with a lot of negativity and be very aggressive against it. So it's a two-edged sword, right? So yeah, on one hand, offshore banking, on the other hand, store of value. Bitcoin becoming digital gold.
Okay.
And I'd be happy to expand on that if you're interested, but like, you know, time is running short. So, I mean, I'm fine, but for you guys.
I was going to ask the question of, do you ever think it will be a time, near future or just future in general, to where we can go anywhere around the world and go and pay for things? Most likely Bitcoin will be an option on side of the regular currency. Do you think that's possible, that a high probability of stores or a high percentage of stores will take Bitcoin as a payment?
I think it's highly likely. Now, it's also not that straightforward. I mean, the euro, for example, I mean, the euro is like officially, I mean, it's a euro, but you cannot pay with euros in the US. You cannot pay with euros in Argentina, nor Japan, or anywhere. So, I mean, it's not that straightforward. I think it's gonna, the way I see it, and I may be wrong, is I see it mostly happening via credit cards. Because, I mean, as a consumer, like usually most consumers, they use credit cards mostly for buying things online. And online purchases have a big issue, which is trust. Like I remember like 15 years ago, nobody trusted buying things online because you were worried about your credit card. Now we learn to trust the credit card.
Yeah, my parents hate it. Yeah, they always I'll be like, hey, we could just go on Amazon. They'd be like, is Amazon safe? I'm like, yes, mom. Amazon.
I mean, exactly.
Amazon is good.
So 2018, Bitcoin is like you pay and it's gone. I mean, what if the merchant scams you, or you're not happy with Amazon, or nowadays you just call Amex, you call Visa, you open a chargeback, and you have a high probability of getting the money back. So I don't personally, I may be wrong, I don't see Bitcoin becoming an internet currency for most day-to-day transactions.
Yeah. I mean, just on that, so there are a few companies coming out at the moment where all the cryptocurrency transactions happen in the back end. So you're spot on. So it's just a credit card as per usual. You go up to anywhere you want to buy something, you tap, you pay. And then that transaction happens on the back end, and the merchant receives US dollars or Australian dollars just as they usually would. So I think that's the next step. And then once that's been around for a while, then you'll start seeing retail outlets actually accepting cryptocurrency itself. But at the moment, I don't think many people touch it. It's too volatile.
Well, 6,400.
Exactly. But so just a quick question, Alex, as well. So I'm assuming that most of your, some of the knowledge anyway that you dropped, it's from networks that you have. But is there anywhere that people should be looking in terms of a reference for a lot of this knowledge you're dropping? You know, like for example, how much institutional money has been flowing in this year? Or is that something you just you have your finger on the pulse within your network?
Basically, if you got any one thing you want to promote it or drop, do it now. Let's go. Where are you getting this knowledge from, my man? It's just by reading. Network. You got. There you go. Your network.
It's my network. Now I had to say most of the information is publicly available. Not all, but most of it is. The thing is, it takes time to find it.
That's the thing. I was just wondering if you had.
It's a big thing.
Yeah, I was just wondering if you had like a particular source online that seems to collate all this information. But it makes sense that there is.
No, I don't. And in fact, there are services of that sort, and I tested a few, and I find them as poor as such services offering similar things for basically global markets. There's no need for special news delivery services. Twitter does it all. Twitter is fantastic.
Do you have any favorite blogs that you like to visit to get some of your unbiased information, or do you have any Like anything that you check on a daily or?
Twitter, my Twitter, the people I follow on Twitter, my Twitter lists are highly curated.
Okay.
Very highly curated. So I with the passing of time, I came to realize that Twitter is best. It's the great filter. It's Twitter. Then I have basically, research from sell side or buy side institutions, but that is, even though it's important, it's actually truly secondary. Anyone can find the needed information. It's all out there.
You know what? And I'm glad that you mentioned. I'm glad that you mentioned that Twitter was the best, because we've always seen both sides of it. Mostly the other side of Twitter is poison. But everybody always tells you, and a lot of people that I've heard talk about Twitter, they always tell you got to filter out. You got to filter out all of the stuff that you know is just garbage. If that means unfollowing people, blah blah blah. And I'm guessing that you just have your follower count trimmed nicely to where you are seeing a lot of the good information, right?
Yeah, but there's actually something else interesting there, is that oftentimes, it happened recently, actually yesterday. Oftentimes people with a lot of followers and very well established reputation tweet fake news. It happens. It happened with China legalizing Bitcoin yesterday. It happened with the ETF back in June, early July. The whole run was fake news driven run by media, and more importantly, some Twitter accounts. And the issue I see there is that for those who don't live from this and are not 24/7 plugged in, how do you differentiate and recognize what is fake and what is not fake? So I guess it's a matter of knowing who you follow.
Yep.
Yeah.
I mean, there's no straightforward answer there.
You must have me on mute, I think.
I've got John.
I have a question for you. Why are you looking for?
Sorry, can I interrupt 1 second? Sorry to. I'm very sorry. I just want to say one last thing there. What I say that applies, in my opinion, mostly to Bitcoin and the main coins. It is not true what I said about small caps and about basically the alt universe. There's a lot of things happening behind the scenes that for finding that out, one needs to be plugged into the right networks. On Telegram, Discord, mostly Telegram, or just basically the phone, is real people. And that's why I think that for most people, it's best to not be in alts. It's mostly gambling, because you can't get this information. You don't know what the fuck is, sorry for that, but you don't know what's going on, right? Like you see a pump, you see it on fake news because X and X and X just made up some stuff, or is there something real happening there? On the other hand, Bitcoin Cash, you see going up, you quickly see, you go around and you check around. There's no need to check on Telegram. You can just go on Twitter and find out quickly and immediately that the pump is being driven by Binance, giving its stamp of approval to Bitcoin SV. And so it's trading the larger caps. For most people, in my opinion, it's easier because most information is public. That's what I wanted to say. Sorry.
Okay. Cool. All right. So I think. All right. So I think that is there any questions in the chat for Alex right now? Or?
Yeah, there is one question for him.
Okay, I interrupted you. Yeah.
What signs are you looking for to find the bottom on something you're trying to trade in a macro perspective? Like, what are you looking for to get in? To say this is the bottom, I'm getting in. So
I'm looking for basically what I define as liquidity vanishing. And the best example to see this, and it's actually fascinating to pick this up and replay charts in real time, is Bitcoin December 22nd. Basically, price started crashing and suddenly the books are empty. There is nobody there, and price is popping up and down 5% a second.
Yeah.
Okay, that change, it depends on every asset is different, but when looking for buying the bottom, that's what I'm looking for.
Okay, interesting. Okay, I think that covers it.
Okay. All right. So we got another. So now you can stick around on this. We go into some topics. We do this thing. Yeah. So we go on to different topics that's happening. Some of the most popular topics that's going on in the crypto space right now, and we just kind of run through these stories and we get everybody's thoughts. So with that being said, I am going to go into the first topic, which is Clay. You wanted to talk about Binance research, right? And it's funny because we just mentioned Binance, right? So what was it that tweaked you on the Binance research, or that made you want to talk about it?
Well, it's just on Twitter, and Luke Martin posted it. They've just got
Luke. What up, Luke?
They just got a new link where they're starting to move towards more of the fundamental side of things, and posting reports and what the company's doing, their funds, and all that kind of stuff, who's behind it and stuff. So you can actually go to one website and find out all the information about all the projects on Binance.
Mm-hmm. So is this whole Binance research thing, is this just like what? They're just out here just researching for the crypto space in general, or what? They trying to bring new projects, make people aware of certain things, or?
I think it's like a general analysis of the projects from Binance, is what I've gathered. I only saw it, honestly, like half hour before the show, but yeah.
It's some sort of Wikipedia for altcoins.
Yeah, they've had it for a while. Yeah. Well, they've been building it for a while. So if you go back a few months ago, it was quite basic. It was just a basic information about the coin. But yeah, Blues is spot on. Like, I mean, this is, for me anyway, this is becoming like the one-stop shop for researching coins, well, coins that are on Binance anyway. But really,
I think I've seen that. I've seen that if you go and you click on the coin, especially in your open trades or what your balance is, it gives you like a whole write-up about the coin and everything, which is good for people who want to actually know what they're buying. I know some people don't care, and they're all price action junkies, But yeah, man, I think that is good, informing people and everything like that. So Binance is really killing it. They are what's pushing it forward so far as exchanges. Speaking of exchanges, Alex, what's your favorite exchange? I guess what's your most used exchange at the moment? If you don't mind speaking up on that, and why do you like it? What is it?
The U.S. Futures Exchange, the CBOE.
Oh, okay.
I mean, basically, my experience is that crypto exchanges are just sad.
and sad in what part? If you had so sad in like security, sad in like just
they
not
break
following.
Down as soon as liquidity pops. I mean, as soon as volatility pops, they just break down. You cannot trade it, and it's not just Bitmex.
Yeah, I would agree.
It happens in all, and then you're exposed to basically denial of service attacks, and I think it's important to be diversified across exchanges, which makes trading more difficult. But I don't have a favorite. I think they're all pretty bad.
I feel that. And speaking of exchanges and being pretty bad, I think you guys can already know what this is about to lead into, right? So I'm going to go US, the SEC and EtherDelta, everybody's favorite. No, it's not everybody's favorite site. It was
it's no one's favorite.
It's definitely no one's favorite. You remember? I remember the first time I looked on EtherDelta, I was just like, bro, I am not putting my money in that shit. Like, what the fuck is that? Like, but anyway, so the SEC had charged EtherDelta founder with operating unregistered securities exchange. Ooh, wow. So just to get a little excerpt out of it. According to the regulator, EtherDelta founder Coburn neither admitted nor denied the findings, but he consented to cooperate and to pay the state $300,000 in unlawful profits. Moreover, he agreed to pay $13,000 in prejudgment interest and a $75,000 penalty. So about like $400,000. The SEC also states that it would have imposed a greater fine if Coburn had failed to cooperate. Damn. So my whole question with this is, this is like the second exchange in what, a month or two. We saw one broker get shut down by the SEC. We saw now we see EtherDelta getting the axe, and I haven't been to EtherDelta since this news release. But is it shut down? Like, is there no more trading or what on EtherDelta? Was people even using that still? What's y'all's thoughts on that?
Honestly, I've never really strayed that far away from Binance and Bittrex and things like that. I know Blues likes to dive into those territories, so.
Now, I'm not gonna lie. Last bull run around November, December, EtherDelta was popping. Like when Dragon first came out, EtherDelta was the place to go. It was like the IDEX right now, but looked way more shittier.
EtherDelta, when Dragon first came out, there was a whole bunch of fake Dragon on there that people were buying.
I think there was to an extent, and that was a problem. And that was a problem with exchanges like those. Is there was a possibility of somebody making a fake token contract or a token address or whatever, and people were buying the wrong things. And I know they got shut down for a different reason, but I think this just all goes in line with the regulations type thing. And maybe that's why Alex, that's one of his reasons why he doesn't like the crypto exchanges, because of things like this. And it's just a lot of risk. I don't know why anybody will be holding that much on EtherDelta, but I've seen, I know people do. There's people out there that do it, and this stuff is starting to become a regular occurrence that we see at least once a month. So if you are trading, make sure it's legit, I guess, because I would hate for your money to get locked up, especially the holidays coming on, man. I know y'all need to send me gifts. How y'all gonna buy me gifts with y'all money locked up in EtherDelta? You got to get me the gifts, right, Clay?
Yeah, that's exactly right, mate.
So, which leads to the next thing. So, I think this was interesting, right? We doing a quick rundown. So, the cybersecurity firm ranks safety of top crypto exchanges, right? And this kind of relates to another point that that Alex brought up with these exchanges and the security breaches. They said the risk assessment for crypto exchanges. Well, they said according to the research conducted by the Moscow-based firm in partnership with Crypto Asset Insurance, they rated Kraken. Kraken platform is the safest crypto exchange. They said, in contrast, OKX, the now second crypto exchange by daily traded volume, as well as Huobi, Pro, and CoinCheck are the riskiest. And they said that some reasons why they are the riskiest is because of factors like basic storage, passwords, technical security, and then also doing the KYC and AML process of know your customer. They're not doing none of that. So they factored all of that in, and that was the rankings. Are y'all surprised by those findings or what? Do any of y'all use Kraken?
I don't. So that's why I'm sort of don't have much info on.
Yeah, no, I already said before, I kind of just stick to Binance, BitMEX, and Bittrex if I ever have to go to it. But yeah, the main exchanges, I don't get into that shady shit.
Yeah, I mean,
exactly.
Sorry, guys.
Yeah, come on. You wouldn't be surprised by this news, actually, because even when you go to the website, you have a lot of bugs and you don't feel like it's secure anymore. Yeah. And yeah, there's nothing regulated at the moment, so you know that you're putting your money at risk the moment you deposit your bitcoins in an exchange. So
I like to say something there that I think is a lot of people misses and it's very important.
Yeah,
BitMEX offers leverage, not necessarily for gambling, but for basically minimizing credit risk. Because basically, say you have a 10 Bitcoin account, 101 whatever, you don't need to put the whole account into the exchange. You can put a fraction. Make sure that basically your liquidation price stays outside the noise, and trade without the credit risk or minimize credit risk. So that's one thing that I think is very important. And another thing is Kraken. I mean, across exchanges, I think Kraken is fairly good now. It used to be garbage. I mean,
it used to be terrible.
Basically, like last year, you couldn't execute. But now it's okay. And at the same time, I mean, it offers basically tether trading, So that it's the only exchange where you can trade Tether directly. And with what's happened, and what will continue happening, in my opinion, it pays off to have. I mean, I hate to advertise, but in my opinion, it pays off to have a Kraken account to be able to take advantage of any dislocation in prices of Tether when that happens again, which will likely happen.
Yeah, I mean,
I heard
about
a lot
the
of people
leverage.
like Kraken.
Yeah, about the leverage. That's the whole point of it. The leverage allows you not to tie all your money in one account. So that way you still have liquidity and you can trade in high positions. Yeah.
Common misconception of leverage is that it's so you can open up a larger position. Most people are like, oh, I got 100x leverage, so I'm going to open up a larger position. When in reality, exactly as Alex said here, one of the best uses of leverage is to reduce your counterparty risk. And in crypto, that's huge. Having the risk, there's always a risk of having money on an exchange. Anyone who's been around the space long enough has lost money to an exchange exit scamming or something along those lines.
Yeah. And that is Maine, guys. He checked in a while ago, and we're about to get back around to him. But we have a few more topics, one or two more. So the next one. So we got some crypto beef going on, right? We got some crypto beef. So y'all know about Bitcoin Cash, obviously, and then y'all know that we have a Bitcoin Cash fork coming on, right? So so the reason for this fork, I'm assuming y'all know, or do y'all want me to run through that? I think people want to know, because I just found this stuff out not too long ago as well. I've been kind of out of it a little bit, but anyway, there's a scheduled fork for Bitcoin Cash on November 15th. And they're going to split into, and Bitcoin Cash is going to split into two rival chains: Bitcoin Cash ABC, that is a joke ass name, favored by Ver, and Bitcoin Cash SV, authored by Rights in Chain. Anyway, the split comes as a result of Ver and Wright, among other figures attached to BCH, disagreeing over the coin's future, with those disagreements becoming increasingly public and strongly worded in recent weeks. So the beef started, and this is where the story gets interesting, right? So the beef started where Ver released what appeared to be a screenshot of an email to him by Wright during a video about his thoughts on the fork. In the alleged email, Wright claims Ver hates Bitcoin. And I think we've all seen seen things of that nature of him hating Bitcoin, and describes him as his enemy. Before ending with a thinly veiled threat, he said, "I am Satoshi." And then he said about being the creator of Bitcoin itself, he said, "Have a nice life. You will now discover me when pissed off." So, hey, man, either these dudes are real passionate about Bitcoin and they're on some good drugs, man. I don't know. This seemed to be popular reoccurrence with Ver and people that he has beefed with or whatever, or I don't know. But this sound is this as serious as it seems? And what do you guys think about this whole Bitcoin Cash fork? And I know it's good for price movement, right? But what do you guys think about all of this that's going on?
I think it's a joke. The entire time. I mean, like in my opinion, like these guys are crazy. I think Ver has as much as I put a lot of shit onto Ver. I mean, I do think the guy has good intentions deep down inside. He's just he struggles to work with the community to get that vision out there and to really make change. I mean, there's no denying that the guy did put a lot of work into Bitcoin originally. I mean, since Craig's come on board, and again, I put a tweet up yesterday, I'll say it again. I apologize on behalf of Australia for letting Craig ride out into the world. But just toxic. He doesn't know what he's talking about. He's snake oil salesman as far as I'm concerned. So anything that he touches, I tend to stay away from, no matter how good it seems. But this whole Bitcoin Cash fork and allowing people to trade it right now, I think a lot of people are going to get wrecked on this.
It's a mistake.
Because it's going to be very easy for both sides to, I guess, manipulate the market and the news. So whilst one coin's trading, at a premium to the other, a little bit of news, and we know that these guys as well control some of the bigger crypto news outlets online. What's his name, for example? What's the guy's name at the top? I've gone absolutely blank.
Rand Nerman,
the
CNBC guy. The CNBC guy.
No. So it's Ver, Craig Wright.
Roger.
Which one? Anyway, I've gone
Which
blank.
one?
The guy that's always posting pictures on the boat.
Yeah.
Craig Wright.
Not Craig Wright, the other guy with him. Anyway.
Yeah.
Gian, the Asian guy?
No. That's all right. I'll come back to it in a sec. But, you know, I mean, like, everything that these guys do within the community, I feel is toxic. So my opinion is to stay away from it. Let it play out, let the dust settle. And then if one of these coins actually does, you know, appear to be doing the right thing, then get on board later on. I mean, that would be my advice to anyone.
Bitcoin Cash ABC, man. Yeah, they couldn't think of anything better than that. Yeah, like we gotta pick a man. Look. If y'all need some, I can think of some names for y'all. Just hit me up, man. Y'all know the Twitter handle. Y'all listening to the show. We gotta get some better names. Alex, all right. So I remember hearing you earlier that you said that you had a few positions open and you mentioned Bitcoin Cash. So I know you're trading purely based off of price movement at the moment, but what are your future thoughts on Bitcoin Cash and this whole situation? Do you think it's a legitimate?
I'm trading. I'm not trading in and out. I'm trading. Okay, sometimes I trade in and out, but not always. Right now I have positions, so basically I put it in and I take profit on the way up, and when it crashes, I add back. I just added right now 535, between 540 and 535. I added some BCH today on that little flash. But that being said, we're getting very close to November 15th, and statistically, basically the peak price of a coin before the fork is T-minus basically 5 days before the fork. So it is getting close to getting out.
I think it's 7 days
completely. So that's my view on the fork. It's trading around a short-term view, but in the meantime, being aware that very soon is going to be the time to get out.
Get rid of it.
Completely. Get out. Ciao.
And that's facts. That's based on numbers right there. When did they announce that? When did they announce that fork? Was it how long? How long ago was it?
Yeah, there was a talk about it a few weeks before. I can say it doesn't came out of nowhere. So I can't say the exact date, but they were talking about it even in the summer, I think.
I honestly don't know, but I think it's between June and July. But I honestly do not know the exact date.
June and July. Okay.
Yeah.
All right. So we got one more thing. Oh, my fault. What happened?
I just wanted to say. I mean, some people may think that all smart money has been talking about this for a long time and planning this thing, but the truth is, nobody was talking about this until last week.
Yeah, because then they probably just didn't release the fork date until last week, right?
Yeah.
All right. So another one. We got more crypto Twitter beef. You know, everybody beefed up in these streets, including the Winklevoss twins and Charlie Shrem. So as you may know, the Winklevoss twins are suing Charlie Shrem for allegedly stealing 5,000 Bitcoins, which is reportedly worth around $32 million back in 2012. And they said that, you know what, we got to sue him for this because, Charlie Shrem was a Bitcoin pioneer, I guess you want to call it, and he went to jail for his relations with the Silk Road, I guess, or whatever. Correct me if I'm wrong, somebody, but I think that was it. He went to jail for a couple of years of that, and then he got out. So Winklevoss twins was like, okay, he got out of jail, and then they saw him buying all of these cars and taking lavish vacation and all that stuff, and they was like, hold on. Wasn't this dude like just in jail and now he getting out where he getting all of this from? This is all paraphrase, right? This is in my thoughts, right? So they're suing him and they're saying and they said that the lawyer, well, I guess Charlie Shrem's lawyer said that he was paying them back. He started paying them back before they even released or even tried to sue them. I don't know, but these are some OGs, as you would say, in the crypto space, and they were on the front run before the masses came to it. And Do you think all of this beef and all of these forks and all of these, like, you know, developers getting into it with each other and all of that stuff, do you think that kind of sets this space back a little bit, or do you think it's good for the competition promotes innovation type shit? What do you think?
I think it's a good thing.
You think it's a good thing? So you think when people see all of this space from the outside, and let's just say that you mentioned Bitcoin to somebody today, and he typed it in Google, and the first couple of stories is he sees so and so suing everybody, and Bitcoin Cash forks and all of this blah blah blah. How you think that you think that would drive some people off? Or I mean, I know we see these things in traditional markets too, right?
So I mean, I'm very much of the mindset that I would like as much time as possible to accumulate what I believe to be, or what I believe is going to, I guess, make me wealthier in the future. Yeah. For me personally, like, we're still early days, and I'm happy for this to run for another few years like this. You know, I mean, I think it's safe to say that all of us in here, you know, we're building our trading skills and whatnot. We're making a little bit of money here and there. So when I talk to people and people give me these answers of, you know, well, Bitcoin's a Ponzi scheme, or did you see the other day that somebody stole X amount of Bitcoin? I'm good with that. You guys do your thing. We'll stay in this space. It takes a lot of time to actually filter through a lot of this junk news that comes out. And I mean, so for me, I'm okay with it. And if people want to stay out of the markets for another few years, by all means, go ahead. We'll still make our money, we'll still accumulate, and eventually people will come on board. I mean, that's my opinion on the whole situation.
Yeah. I feel that. All right, so that was a wrap up of the stories, the news that came out over the past week, which is kind of cool. But that leads us to our next segment, and I think it's one of our favorite segments on the show, or one of the listeners' favorite segments of the show. Maine, my dog, you ready for that? You prepared for that, or can you give us that knowledge real quick? That's all we need right now.
Drop a little bit of sauce for y'all.
Okay, there we go. And shout out to Maine. He's a very saucy dude, man. Me and him, we was out there kicking it in Vegas. It was a live time.
We drank a little bit of the sauce, that's for sure, man. Vegas was wild.
Yeah, man.
You know, funnily enough, I actually had a question for Alex before I just jumped into the charts here. So drop it. With a coin like, you know, Ethereum, you know, me as a purely TA focused trader, I don't really pay a lot of attention to any of the fundamentals. I mean, you're one of the accounts I follow for any sort of macro fundamental views, you know, and I respect your, you know, reviews very much. But for a person like me, I do hear a lot of stuff about like the F being kind of like, you know, a dead token now, like you said, with the ICOs kind of being dead. Do you not still see a coin like Ethereum though? Like, how I see it is, it's just going to be a tool to, you know, transfer money from, you know, those with knowledge to those without, you know, again, in the next bull run. Like, to me, I find it crazy to think that like $200 for F is not going to be a good investment 3 years down the line. Even though maybe its use case and its utility is like kind of defunct, do you not still see it as something that will continue to get pumped and market cycled just for that exact reason that, you know, when it's back over $1,400,
yes.
people buy it?
Like 100%. Basically, I see altcoins and Ethereum, and particularly BCH, for me, they are what I define as high beta tokens. So when I want to express my view and get a little leverage without getting leverage, I get into BCH and ETH. It does not always work. Sometimes it fails.
Yeah.
Example is in the July run up, because it was ETF driven. Basically, alts perform like very poorly. So sometimes it works, sometimes it doesn't. But I think as a long-term trade, I think right now ETH is very good. At the same time, I gotta say that if Bitcoin goes down to 5750, which again, going back to the beginning, I wouldn't be worried if I were a long-term holder. Not anymore. I would be worried if I were a shitcoin holder, because very possibly if 5750 breaks, it may not get back for a long time and shitcoins may die. But that said, what I wanted to get to is if Bitcoin drops to 5750 and it breaks, I will sell. And the trade there for me is selling ETH BTC. And basically, the way I would do is I would put a stop at 6,000. So sell this 57.50 break, stop at 6,000, and yeah, that's it.
Yeah, no. So I mean, I couldn't agree more, because I have a lot of friends, right? You know, they see me going to, you know, this World Crypto Con. A lot of them follow me on Twitter, and they want to get involved, but they're not either willing to, or, you know, have the knowledge. I mean, I do think there is still a pretty decent barrier to entry for a completely unsavvy investor or someone who has no idea about the space to like sign up on an exchange, you know, get Bitcoin, buy other altcoins, and have any idea what you're doing. Like, it does take a lot of effort. So I have a lot of friends, and I give them very similar advice to you. I say, listen, if you're a long-term holder, which I think most people should be, unless you know what you're doing, you know, let's say 3 to 5 years, whatever the time frame you want to put it on. I think coins like Ethereum, like Ripple, Bitcoin, obviously, Bcash, at these prices, it's hard to say you can go wrong. And I obviously always add the caveat, you know, it can go down further. That said, I think we're a lot closer to the bottom than the top, obviously. So, you know, Bitcoin could go to 4,500 bucks. You know, there's no doubt in my mind, but to me, Bitcoin going to $4,500 just means I'm going to buy cheaper Bitcoin. It does not mean I'm going to liquidate all my holdings, you know, and try and catch the absolute bottom for the next bull run. I don't really care. I don't care if I'm, you know, getting an entry a little late, as long as I have kind of that confirmation. So I couldn't agree with you more on kind of all of those points. I think a lot of these coins will see another good day, but you know, you brought up a very good point. A lot of people who don't want to mess around with leverage, really altcoins offer you an ability to essentially trade leveraged Bitcoin without using leverage. You know, that's kind of a layman's way of explaining it, but so yeah, let's kind of jump into the charts here. And I mean, this is something, you know, a lot of people who follow me, I don't think I'm sharing my screen yet, am I?
Not yet.
Can I say add something there, please?
Yeah, of course.
Just very quickly. Like the way I see it is I mean, one doesn't need to be a trader actually to get in and make money with alts at this level, for as long as one gets into high quality coins. Because what happens is we get some news popping, and these things pop 50%, 80%, 30% in a matter of days.
Yeah.
So I just the view is that one doesn't, at these levels, for those who are not traders, are not that worried about the downside, doing research and picking good coins, I think we should pay off. Just a matter of closing when it pops and not going all crazy and saying, "Oh, this is the standard," you know, that kind of crap.
Yeah, that's what I'm kind of. Yeah, that's what I'm going to kind of dive into here, because it's so funny. So I mean, obviously, those of you who follow me on Twitter see I was doing a little bit of bragging today, because we had a whole lot of people, you know, extremely bullish up into what I saw as, you know, a very obvious area where we could see a sell-off. You know, and we kind of are seeing that now. And, you know, so my kind of expectation on Bitcoin, unless we see, you know, a significant move tomorrow, I think we're going to come down back below these lows here at 62.10.
I don't think I see you sharing. Or you know what? I'm sorry. You are sharing. I'm sorry.
Come on, bro.
That's the host's fault.
So, I mean, that's kind of my, but what I kind of want to talk about, I mean, is kind of exactly what he brought up there, you know, knowing when to take profits. You know, and knowing when to, you know, remove emotion. I think one of the biggest issues for people is the psychological aspect of trading. Most people are impatient, and I understand why. Like, if you learned how to trade during this, you know, where it's a new all-time high every single day, and it's consistently going up, and there's literally, you know, everything you're buying is going up and doing insane gains. Like, I understand when it comes to what we've had over the last couple of weeks here, which is almost no volatility, right? For the month of October, it was crazy. I understand how it can be very frustrating, but what's funny to me is I see on Twitter a lot of people using order blocks and stuff like that now, and supply resistance. They're actually marking good levels that I have marked as well. But the problem is, you know, everyone on their chart has this level marked, let's say, right? But then we're sitting here for weeks, nothing is happening. And then when the time comes where it actually comes down into this level, you got to imagine that this price action hasn't happened yet, right? When you have this big red candle screaming down at you after weeks of nothing, it takes a lot of balls, for lack of a better term, to actually put the trade on. And I think that's one of the biggest hurdles for most traders who don't really know what they're doing, or who are new to the space, is to actually get in there and put the trade on. Because psychologically, it's counterintuitive. When price is going down, the last thing you're thinking of doing, just by normal logic, is buying. But, that's the exact time that you should be buying. Like, if you think people who are, well-read in investments are selling Bitcoin here, you're wrong. They're selling on the way up, right? So when you start knowing what you're doing, you're going to find yourself buying on down candles and selling on up candles. And it sounds super basic. And to me, a lot of TA is very basic. I think learning how to draw levels and map out price is actually the easiest part of trading. I think risk management and the psychological aspect of actually getting into a position, putting on the trade when we get to an area where you expect buying. If you drew out this level and you said you expect to buy here, and then you had, like, this level occurred on October 14th, let's say, the trade didn't happen until literally 2 weeks later. What should you be doing in this entire 2-week span? Right? Like sitting on your hands doing shit fuck all? Like, of course not. You should be planning, right? You should say, okay, if price comes down here, let me calculate my risk. What's my position size going to be? What's my target going to be? Where am I going to put my stop? What is my logic behind this setup? I journal, right? Especially when I was learning in the beginning, I did a lot of journaling. But the obvious trade here is, at least to the bottom of the range again, and that gives you a nice risk reward. But the problem is, during this entire time, most people just assume, how many 10K targets and 3K targets we had in October, right? And then when the move finally happened, no one actually fucking bought anything. No, like, everyone said that they longed this thing. I'm telling you, the majority of people online did not long this. Just the way it is. So that's what you got to be doing in this downtime, like these low volatility times. Same thing when we came up here. As soon as we came up here, what happened? Everyone thought we were going to break out and go to fucking, I saw so many 6,800, 8,000 targets. And I'm like, okay, well, I'm going to put a sell order here. And I'm just going to see what happens. So, psychology to me is something that, the only way to learn it is to just do. So for those of you who are still in these markets, grinding, actually trading, like, you're doing yourself a favor, because when the next run happens and when volatility comes back, you're going to be prepared. You're going to be used to putting on trades. There's no replacement for chart time and for actually losing money. I was not someone who learned a lot from demo trading, just because when I was paper trading, when I was demo trading, it didn't feel real. So when I started making real leaps and bounds in my trading education and my ability was when I actually started risking real money. And the way I did it is I just cut my position size way down. If I was going to do a 10,000 contract position, I would do 1,000. If 10,000 was 2% of my account, I would do 1,000, just so I had the actual feeling of putting real money on the table. And it changes the game. It really does. And what you have to be is you have to be emotionally unattached to this money. Once this trade hits and I enter here, the money is gone. I have my defined risk here. If I get stopped out, let's say I lose $100, that $100 is already gone to me. Maybe it's going to come back to me here and be $300, or maybe it's gone. I don't care. It's already on the market. I put the trade on and I'm emotionally unattached, because what you'll see a lot of new traders do, a very common symptom of new traders, and I saw this during this move, because this was the first move we had basically a month and no one was ready for it. Surprisingly, when you had 2 weeks to really prepare, is a couple of things. Price will hit their entry and then it will come down. They won't get stopped out, right? And it's here. What do? They cut their trade early because, like, it doesn't look good, I'm out. And then you come back the next day, and it worked out. That sucks, and that fucks you psychologically. I'm telling you. The same thing here, right? It comes up, you get your entry, but then it's like meandering around. It's not doing what you want. So you're like, I'm just gonna take profit early, and I'm gonna adjust my stop to break even right away. And then you do that, you take profit, and you come back, and boom, the trade is paid off again. That's gonna fuck you up psychologically. The way I thought of it when I was first learning is like, I'm like a robot. If the trade signal enters, I'm either getting out at take profit or I'm getting stopped out. There's no in between. And the same thing happens, here. You have someone, boom, it enters and it looks really good. And they're like, well, you know what? I'm going to leave it on. I think I'm gonna get a little bit more gains. This is exactly what Alex was saying with some of these altcoins that go up 30, 40%. People are like, oh, well, I don't know, man. I think this is the day I get my 100%. You know, this is the day I'm gonna 10x my initial investment. And then all of a sudden they come back and it's completely fully retraced. And you had a winner now become a loser. That's one of the worst things that can happen in your learning. It's really going to mess you up. So, you know, you've got to take profits. You've got to have a plan in advance. And so these low volatility times are times where you should be doing exactly that. You should have a super ironclad plan. So when price actually comes to your entry, you know exactly what you're doing, you know, and you're prepared.
Just to touch on that, that's one thing I do straight away. I set my stop loss, I set my targets, and just leave it. Obviously move your stop up if it's been going on for a few days or anything, like, you know, you've hit a couple of targets or whatever, but I do not touch my stop after I've set it straight away, because you think about it too much.
Yeah. And what you have here, and everyone's been complaining about volatility. Yeah, it's been kind of dead, but the 2 trades that I took this month, this is all you need in a month to seriously grow an account. 2 trades like this. With proper risk management and consistent wins, this is all you need, honestly. And you don't need to be in a trade every day. The other major thing I see, obviously, is when people get in a trade and price is below their entry and they want to exit because they're freaking out. The reason is you're probably risking too much. And no one in crypto wants to hear that, because risk management is like almost like a faux pas topic. They're like, well, fuck risk management. It's 100x, you get the fuck out, right? So that's a surefire way to get blown the fuck out. Trust me, as someone who has blown multiple accounts, it always seems to happen when I'm risking more than I should be. It's that one trade where you're like, you know what, I'm on a roll. I can't lose right now. You know, I'm gonna risk 10%, 15%. It takes a way more percent gain than you realize to regain equity that you've lost. There's nothing worse than losing your capital. If you have a $1,000 trading account and that account gets down to $100 because you made a bunch of bad trades in a row, you need to do 900% to get back to break even. That's insane, right? Like, you need an alt season just to get back to break even. So, you know, like he was saying, if you're in some of these, you know, altcoins as a way of diversification, trying to catch some of these pops, some of these moves, you know, take profits. I said the exact same thing the other day. I posted on Twitter and a bunch of people were like, nah, man, ripple the standard. That's what everyone fucking said to me. I posted, I said, I'm hedging right here. Everyone's like, ripple the standard, and then we drop 10% after, right? So, you know, don't get caught up in that bullshit. Always fucking pay yourself. I don't care if I miss part of a move. You know, as long as I got in, I got out, I made some money, I consider that a win. I get a lot of people who ask me, they say, oh, I wish I wouldn't have closed my trade. It kept going. I wish I wouldn't have done that. So if you made money, the trade did what you thought it was going to do, like, that is a win all day long. So, you know, so take that shit. So, you know, let's kind of jump in. Sorry, go ahead.
Now I got a question for you on that, man. So you said about setting targets and taking profits. So what if you and you mentioned altcoin. So what if somebody's trading on like a Binance or KuCoin, right? And they don't have it to where we talked about last episode, to where you can set a stop loss and also a sell target or whatever. How would you, for people that want to be safe but also want to maximize the idea of locking in profits, how do you suggest they go about that? Like,
so if you want to be safe, don't trade on exchanges like KuCoin and Binance. You want to be really safe, but I understand people want that 100x win. You know what I mean? Like, people want that. I understand it. People are greedy by nature. That's why markets move the way that they do. It's human emotion, right? Like, when you see Bitcoin ripping at 20K, if you think there's any sort of fundamental reason price went up here outside of just human greed, you know, you're wrong, right? Like, that's what you're seeing in this market cycle. That's that Wall Street cheat sheet that you see where it says, okay, this is the, you know, anxiety phase and the depression and the denial and the fucking greed, right? So understand the desire to trade on those exchanges and hopefully catch one of those trades. I mean, my first piece of advice is, you know, a great way to get 1,000% winner on your money is just to have consistent 10% winners, you know, or consistent 20% winners over and over and over again, and actually compounding. But if you're super keen on trading some of these, you know, less liquid coins on, you know, exchanges that aren't sophisticated and don't have all of the tools, I mean, I know a lot of them you can at the very least put in sell orders. A lot of the times when I'm fucking around on a site like Binance, which isn't often, if I'm looking to catch a bottom, I'll actually set sell orders at, 50%, 100%, whatever it is. That way I know if it pumps when I'm asleep, because a lot of times these moves are violent and quick, right? Like I think, what did we saw basic attention token, right? That.
Yeah, they pump quick and then they come down quick. So how do you advise somebody to go about it that doesn't want to lose money but wants to try to hit the
I would for sure say, definitely set, like, so if you're in this coin here and you manage to buy it here, and you're not setting a sell order at, at 25%, 50%, on incremental levels where you should be taking profit, you're doing it wrong, because you want to be able to wake up and see that your position got closed. If you can't put a stop, I very rarely am going to trade on exchange that I can't put a stop, but at the very least, you should have a stop in mind. So if you're trading this coin and you can't put a stop on whatever exchange it's on, let's say you're on a KuCoin where there's no stop or whatever.
Just alerts or something.
I would have I would have a mental say, okay, I'm trailing my stop up to here. Maybe I've trailed it up to here, but let's assume I left it here. I have an alert on TradingView that when we come, I would move it even higher, right? I'd put my alert here. If this is where my stop is, because you see how fast it went through that level, right? If this is where my stop is, I have an alert that's going to come to my cell phone and say, hey, fucking open up the exchange and prepare to cash out. That's one of the biggest hindrances to trading crypto is the multitude of exchanges, the lack of sophistication of many of these exchanges. It makes trading very hard. When I'm trading Forex on Oanda, I can have all of these different positions open on various different currencies, all in one place, with all a variety of different stop orders, take profit orders, all in one location. I can close all my positions with one button, where it's like, okay, now I got to log into Binance. I got to open up my UFA thing so I can log on. And then I got to log on to my email to approve my log on, because you have to do that every time for some reason. Then I got to log on to KuCoin. Then I got to log on to Bitfinex. Like, it's a nightmare. That's why I stay away from this stuff for the most part. I very rarely trade anything that is a small cap. But for those of you that are, like, if you're hoping to catch one of these moves, which in my opinion have all just been, dead cat bounces in a bear market, this looked like it almost went to all-time high here, right? So, if you were in this pump and you didn't have a take profit at this previous peak, I don't know what you're doing, right? Like, that seems like a very obvious area. It doesn't take a rocket scientist to say, okay, well, where do you think price is going to go? Well, look for previous swing highs, previous swing lows. A lot of people I saw posted charts and were like, are we going to see a new all-time high on this coin? And it's like, well, if you held it hoping for a new all-time high, look how nasty that wick is. We only traded over these levels for like probably an hour, and then it was like dumping off right away. Probably even less than that. A couple of hours.
Can I say something?
Sure.
Yeah.
First of all, I think that the last 10 minutes that you talked, I think they should be clipped, and for most traders saved, and listened. For any new trader, listen to once a month. What you said is it's not entirely how I trade. For example, I trade breakout, so like I often I buy on the way up, but that's just how I am. It's a different thing. I think you just covered almost everything, and it was spot on and brilliant. And I actually don't say this lightly. I really mean it.
I appreciate that, man.
That's why we got him on the show, man. We kidding that man, and that's why he gets to close out the show every other week.
So, like, I know how you can buy the breakout too. So, for example, like a lot of people were asking me I had some people DM me saying they longed right here, and first of all, I like put my palm on my face saying why. But to me, if I think a breakout's going to happen, I talked about this in one of my like YouTube live streams. If this is a 4-hour level I'm watching, I want to see a 4-hour candle close above it for me to consider it a confirmed breakout. So why buy here when I can wait for it to break out, close, and then you're likely going to get a retest. You might not get the perfect retest, but buying on this level here, or even more like a more safe play, is buying on the break of this preceding high. To me, I'm okay missing the first $200 in the move if I have confirmation. I'm a relatively risk-averse trader. And that's going to bode you very well in the crypto markets where everything is extremely risky. So, like you said, I think a lot of people need a lot of practice, and it's amazing to me that we've been in a bear market for however many months now, 8 months now, 9 months now, and people are still not taking profit on pumps. It's like if you didn't learn your lesson the first time, you know, when everything was pumping here, I hope you learned it when everything was pumping back in February, or then when it was pumping in April or July or, you know, August. And, you know, yet again, we had a lot of, you know, altcoins run, you know, kind of near the early to end of October. You know, there's nothing worse than like not paying yourself. Why are you here if it's not to make money? And I know you want that 5,000% ROI, but most coins that are going to give you 5,000% ROI, it's not like you can put 2 Bitcoin in them anyways, right? Like they're low liquidity. You're not going to exit your full position at all-time high, right? Like people are delusional. And it's amazing the amount of like cognitive dissonance that exists in this space where people have this like preconceived notion in their mind. Like I see great traders fuck up because they're bag holding some coin and they're going to like look at the chart and be like, oh, this looks like super bullish. I'm like, does it? Or have we been going down for 10 months and you just own a bunch of this and are underwater and really want it to go up? You know what I mean? So you have to be unbiased. You know, one of my favorite things to do is to delete all of my levels off of my chart and start on like the weekly and just do it fresh. Because like, again, like to me, this doesn't look good. But I mean, to kind of summarize, you know, where I think Bitcoin is going in the next little bit here, I think we're going to come down to like 6,200 right here. I think we're going to clear out these lows. Personally, from a TA perspective, I think 6K should break. A lot of people are getting on me on Twitter being like, oh, Maine is bearish. You know, like he's an idiot. We're at the bottom. I want Bitcoin to go up. I own Bitcoin. I want it to go up. I really do. But I just think from a TA perspective on the short term, because that's what I'm talking about here. I'm not talking about years. I'm talking about within the next, you know, maybe 3 to 6 months, it is completely, or obviously sooner, it is completely possible that Bitcoin goes below 6,000. And just like Alex said, I'm not going to short 6,000, but if 57.80 or whatever the low is breaks, I'm going to short it. And potentially, you know, get some gains on a ride down to 4,500. But for the average person, I think at levels, you can't go wrong. You're accumulating some of the good projects, whether it's, you know, if you're buying Bitcoin or just stuff that's going to go up again in the future. I think these are very cheap prices on the long term. So I'm definitely long-term bullish on crypto. But, you know, in the very much short term, I do think there is a serious possibility that if we come down below this level, we could see, you know, an accelerated sell-off. And, you know, don't short this level. Wait till it breaks down and short it here, or short, you know, the break of this level. But again, you know, $4,500, I don't know if it's going to happen. It's completely possible. Anything is possible. But, you know, I do think we're a whole lot closer to the bottom. And I definitely agree with Alex. I think the worst of this is over. And for the majority of investors, you know, these prices are cheap if you're talking 3 to 5 years from now, where, you know, crypto market cap, I think, like you said, was $200 billion. When the S&P had this pullback that we had the other day, you know, I post, it's so funny. I post like a shit post on Twitter and it gets like 100 likes or like 600 likes. And then I post like the exact like bottom catch on the fucking S&P 500 and it gets like 10 likes. That's crypto I'll never understand. But during this kind of pullback we had here, I think Amazon lost $200 billion in market cap, just Amazon. So to try and put in perspective how small crypto really is still and how high this stuff can really go, you know, if you buy Bitcoin now at 6,000, I guarantee you 5 years from now, you're going to be one of those OGs that they're like, oh man, you just got lucky. You bought it at 6K, man. You're just lucky. You don't actually know what you're doing, because there's a lot of people in those spaces. But guess what? It pays to be lucky, man. So I think at this point in the market, it is so depressed and prices are so low. Like if you're just like, hey, I want to add to my Bitcoin hoard or my Ethereum hoard for the next bull run, I don't think you can go wrong. And for a person like myself, I'm accumulating. And guess what? If price comes down to here, I'm going to buy more. You know, I'm not going to cash out and be like, oh, it's going to zero. Because people will, you know that, right? Like if we break through the yearly lows and we come down here, people are going to be screaming for Bitcoin going to zero. I just don't think that's the case. I think the worst is definitely over. If you're a trader, you know, be aware we can go lower. But if you're an investor just saying, hey, when should I get involved in crypto? I think now's a great time. Like when I have friends who are asking me about crypto 6 months ago, I was like, not yet. But now I'm like, now is definitely the time to pay attention. I'm not saying the bull run's going to start next month. But I guarantee you, when the next bull run does happen, whether it's in a year, 2 years, 3 years from now, you're going to wish you bought Bitcoin at 6,000. That's for sure.
Hell yeah. And I think that is the perfect motherfucking way to wrap up this episode 9 of the Unleashed. So, Alex, I want to say thank you for being with us today. Is there any other things that you want to close out on? Do you got something coming out in the works? You writing some books? You in Hollywood shows, or what you got going?
So many. I have so many things going on.
Is there what's the one thing that you would want the crowd to know about, or just any kind of?
It's not that I shouldn't be talking about things that haven't happened yet, so it's
true. There you go.
jinxing it. So, but yeah, it's working on quite a few things outside of trading, all very exciting. And but back to trading, I just want to I want to go back to what Main's been talking in the last few minutes. I think it was brilliant. I have a lot of comments to add on that, but that'd be, I guess, for another show. Because it could get very long. But that said, I would like to part with one phrase, which is in it to win it. In it to win it. You gotta trade. I mean, just watching. You gotta trade. You have to take. I mean, not you. I mean, in general, traders. We have to, and it can be hard. If you're not in, you can't win. If you're not willing to lose, you can win. And the beauty about crypto is it allows new coming traders and investors to size positions accordingly small to be able to withstand the risk and not suffer in the process. I think
so. Basically, what my guy Alex is saying, he's saying get up off that bench and get in the game. Get in the game. Michael Jordan couldn't drop. He couldn't win 5-6 championships without getting in the game, man. So you got to get
shots you don't take, guys. Like if you're sitting in USD or whatever your currency is, just waiting for the bottom, like you are missing out. There is risk in trading. And if you're not willing to take the risks, it's like, why are you here? Why are you staring at the charts all day? You gotta pay to play.
Yeah, there we go. We ain't doing no stressing because we turn them L's into lessons. You dig? So that is the end of this episode. I want to say thank you, Main. Thank you, Alex Kruger, once again. Follow him in the Twitter at crypto_macro. Thank you, Wolf. Thank you, Clay. This is episode 9 of the Crypto Unleashed. Tune in 2 weeks. Hey, we might have a special edition for Dog getting to 100K followers. So stay tuned for that when we might throw him a little party on here. So that is a wrap. Enjoy your weekend and peace out.
Yeah, thanks, guys. Thanks for joining the episode, Alex.
Peace.
That was fun, guys. Thank you very much for having me.
Thank you.